Well, happy Friday, everybody. This is Matador from freetradingvideos.com. It is the 6th of March, and looks like jobless rates went to 8.1%. 651,000 jobs were lost in February. It's the highest number since 1983. Put a pretty good-sized drag on the market. You can see after this run-up in the morning, here's the S&P 500 ETF. It just kind of tanked. So not terribly impressive as far as the bullish side of the market. H&R Block did post a nice profit, though, for the third quarter. Looks like Wells Fargo is slashing their dividend. Oil is rising above $44. This U.S. unemployment apparently weakened the dollar and gave foreign investors more buying power, so oil is above $44. It looks like Coke is going to invest $2 billion in China over the next 3 years. And so interesting news, but that's probably why people are pointing to the fact that we had a drop in the market again after this initial run-up. To look at this, you can see the tick spent most of the day below zero after that, with a few notable pops up above zero. We're doing that again right now. The trend itself spent most of the day below 1.0, which again can show bullish sentiment, but the trend Q is exactly the opposite, and it has spent most of the day above 1.0, in fact above the 2.0 range, which means twice as much volume flowing into stocks that are declining than going up. So that shows bearish sentiment. There's a schism now between the two, which I don't like to see if I'm going to decide to go long or short the markets. Not the best trading environment when those things don't match up. And the volatility index, right, after a nice little run up in the markets sold off with a concomitant rise in the volatility, corroborating that sell-off. And now we're finally just coming back a little bit in the VIX with this last little pop that we're having in the S&P. So just a little bit of a higher swing low in here, trying to break out past this resistance area. It's a pretty good size one, right up into this resistance as well. So here's a 60-minute chart, or a 15-minute chart. So just to pop up right into the gap fill, you can see that resistance area. It's all here. Declining 50 MA on the S&P 500 15-minute chart. So nothing to sneeze at. Not a lot of people want to buy long in there, especially right before news. And it was just poor. So on a daily chart, we're kind of just sliding south. So anyway, the put-call ratio right about dead even at 0.8. Some people call 0.8 the even number instead of 1.0 for this ratio. So interesting stuff. Just wanted to give you a run around the markets. Say I hope you guys have a great weekend, and bring your questions back to the table. I'm going to try to answer some of those this evening, actually. And I hope you guys are having a good day, and hang in there. Talk to you soon.